Good afternoon. This is Beth Berry. I'm the Vice President of Business Development for Real Green Systems. Today's webinar is really important. Many of you have reached out to Real Green and asked us for our thoughts on the types of federal aid that are available to small businesses, the Paycheck Protection Program and the other SBA loans and grants. I'm using probably the wrong word. That's why I brought professionals today that are available. So as most of you know, Real Green partnered with Sarant Capital in the fall of 2018. And although many of you don't see any of the folks we work with, we were able to reach out to an expert, Fede Stefanos, who is on the Real Green Sarant Growth team. He is very much an expert in this area and has been following the SBA in terms of timing and how we're going to implement these applications. Most of you in the green industry have heard of, or have worked with Katie Clark in the past. Katie was the finance manager for Scott's Lawn Service franchise group, many of whom later became business owners and customers of Real Green software. Katie has shared the stage with me at our user conference in the past and has a wealth of information. She's a CPA, an MBA from Miami University in Ohio. She is based in Pittsburgh today and works with supporting strategies, and they have already assisted many of their small clients through this process. So she will also provide some color commentary and actionable steps and how they relate to the lawn care industry. Hello, Fede. Hello, Katie. Fede, why don't you start us off today? Katie, I'm going to share the presentation so that if you have the PowerPoint. And this PowerPoint, by the way, is available on www.realgreen.com/impact. And as well as contact information for these folks.
This is Fede Stefanos. Thank you very much, Beth, for the intro, and Katie, happy to be able to co-present this content with you today. If we could just flip forward one slide, there's a quick disclaimer here. Everyone should make sure that, look, the environment is very dynamic and things are changing very quickly, and we're still getting updates as we speak. And so it's imperative that everyone makes sure that they're using the latest and greatest information that's out there, and obviously to consult with your own tax and legal counsel as needed. I want to start us off by talking about the major stimulus legislation that's passed over the last month. The coronavirus pandemic has definitely, and the subsequent economic downturn has definitely necessitated a number of legislation going through Congress. And many times in the news these days, you'll hear about a phase 1, phase 2, phase 3. So on here, you'll see what the major phases are. Back on March 6th, a law was signed. This was the Coronavirus Preparedness and Response Supplemental Appropriations Act. It was $8.3 billion, a small amount compared to the legislation you're seeing today, but this is what kicked off the series of legislation and the relief efforts and the relief options available to small businesses. The very first option there is the Economic Injury Disaster Loan. We'll talk a little bit about that today, but this was available almost a month ago for folks who were feeling the pressure of the economic downturn and many of the shelter-in-place orders that we have today. On March 18th, the second phase of this was passed. This was the Families First Coronavirus Response Act. And the main key options that are available in terms of relief for folks was the emergency paid sick leave, emergency family medical leave, and then making COVID-19 testing coverage free of charge for everyone, either through private health plans or through Medicare, Medicaid. Finally, phase 3, which is the Coronavirus Aid, Relief, and Economic Security, also known as the CARES Act. This was signed into law last Friday. This is March 28th, and it provides approximately $2 trillion in economic stimulus for folks. And this is where a lot of the relief options that we're going to talk about today are relevant for folks that are listening into this webinar. Primarily the Paycheck Protection Program, PPP. And we'll be spending a fair amount of time talking about what that loan relief option looks like in terms of eligibility, qualification, loan amounts, forgiveness amounts, and how to apply. Two other key relief options came out. One was the payroll tax deferral, which allows you to defer a portion of your Social Security taxes and pay them in 2021 and 2022. And finally, another key relief option is the employee retention credit, which is a refundable tax credit, and we'll talk a little bit about that. On the next slide, key legislation overview, I wanted to talk a little bit about the economic injury disaster loan. This again was passed as part of phase 1, and the benefits here were, it's a smaller loan amount up to $2 million, but it was available right away, and the application process was pretty quick. You can get an emergency advance of $10K. So some details here for folks. There are some rules around the use of EIDL if you will be applying for the Paycheck Protection Program later. So if you were going to be applying for the PPP, you can use that to refinance existing EIDLs. And so there are some rules about how those two can or cannot coexist that we'll get into later. But this was one of the first relief options available at the start of March. On phase 2, this was the Families First Coronavirus Response Act. The main things that folks need to know is that employer with fewer than 500 employees must allow eligible employees to take emergency paid sick leave. This is again related to coronavirus, and also family medical leave. So protection for employees and employers around the rules governing time off and medical leave given coronavirus, as well as I mentioned earlier, employer-sponsored health plans and Medicare, Medicaid should provide and are required to provide free testing for COVID-19 with no copay or any other cost. And then finally, I want to bring it over to phase 3. Again, this is the CARES Act. This is the major law that was passed late last week. And this is, again, $2 trillion, approximately $2 trillion stimulus package, unprecedented in size. And the key thing that folks on this call need to know is that it provides a fair amount of tax relief for small businesses through a series of either tax credits or forgivable loans that we'll be discussing today. Also, as part of the CARES Act, sorry, maybe go back one slide. Also, as part of the CARES Act, there is a couple of options that also provide relief for individuals and families. Again, consult your tax professionals on this, but a lot of this is the paychecks that you've been hearing on the news as passed by Congress for individual taxpayers. These are refundable tax credits that are available, as well as a student loan assistance and relief there. And again, some rules around what disbursements and distributions and loans against retirement plans look like. So again, some relief available there for individuals and families. From here on out, we will be talking about the relief options that are available for small businesses, which is the most relevant for folks on here. The focus today is going to be on the Paycheck Protection Program. The summary there is that it's a loan that is eligible either for partial or full forgiveness if the loan is used primarily for payroll costs and some other costs that Katie will be walking us through today. This loan program is through the Small Business Administration and the SBA, and there are a number of lenders that are SBA approved that will be the ones that you will be applying with. The other two options that are available are the payroll tax deferral and employee retention credit. There are some rules about how those two exist with the Paycheck Protection Program, meaning you cannot take the payroll tax deferral if you're also getting the Paycheck Protection Program if the Paycheck Protection Program loan is forgiven. If it's not forgiven, I believe the payroll tax deferral does still apply. And also the employee retention credit, again, is a refundable tax credit you can use to pay tax liabilities, and it is refundable, meaning if your credits exceed tax liability there, you do get cash back through the tax filing process. And with that, I'd like to hand it off to Katie, who will walk through the specific details of the coronavirus relief options that we just discussed, and then double click a little bit more into the Paycheck Protection Program. So thank you, Katie.
One quick question for you, Fedi. I know that you have another engagement today, and we've received this question already. Should one of our business owners go through this process and then find themselves in a position where they're not going to actually need the relief, Is there an opportunity to press pause, so to speak, or once you're enrolled, you're enrolled?
Well, there are a number of options here. I think, look, overall, the attractiveness of the Paycheck Protection Program, the loan terms are very attractive in terms of interest rates, and the fact that it's forgiven if you are using them for eligible costs is mostly a no-brainer for many folks. If you don't need that high of an amount, there are other options like the EIDL. That is the other option that's out there. And again, the EIDL, it was on a previous slide, but it is an option there. There could be a situation where folks want to wait and see if they do need the Paycheck Protection Program, and that's not a bad idea, but there are a couple of things that folks should be aware of. You can't miss the June 30th deadline, which is set for this program, as well as there is a risk that the $349 billion that are earmarked and appropriated for this Paycheck Protection Program will be depleted if folks wait too long. But so I think you need to look at your specific situation, but it's a fairly no risk process to take. I don't know if Katie, you have anything else to add?
I think that's a good summary.
Okay, well, Fetty, I really appreciate it. And as you have updates available and can share with the Real Green team and our family of business owners, we would really appreciate it.
Sure, happy to. And again, just to be clear, I am not a tax professional. Folks really need to consult their tax professional and any legal counsel. This is information that we're providing to give directional guidance for folks. But again, this is not a substitute for that. So just want to make sure that folks understand.
Excellent. I agree. Thank you so much. Katie, take it away.
All right. So welcome. Thank you for taking the time with us today. I'm going to take a very practical approach to this. There is a lot going on, a lot of information on many different levels and things that can impact your business. But what I'm going to do today is sit and think, if I was a lawn care owner and it's April, you should be really busy. And you might be interested in these loans, especially when you heard about forgiveness and the potential for possibly getting money that you don't have to pay back. You should be interested. But you also might be so busy that you are not wanting to sort through all of this. So I want to help give a little bit of background on some of the things that I'm seeing. Like Fatty had mentioned, this has only been out there, this whole program from the SBA for 4 weeks. The particular CARE Acts that we're going to talk about today were just released 1 week ago. They were signed into law. They were hopeful that the banks would be able to launch them today, but many of them are not able to because this is just unprecedented with the turnaround time on these loans. So the items we're going to discuss are listed here: the SBA debt relief, there's an express bridge loan, the economic injury disaster loan, which they often call the disaster relief loan, that was the first one that came out, the employee retention credit, the economic injury disaster loan emergency advance, which is a part of that disaster relief loan, and then the Paycheck Protection Program. So you've got all of this. And if you log into the SBA website, you're going to see all this support and all this help that you don't have time probably to sort through. I don't want you to lose interest, though, in these opportunities. So SBA debt relief plan, if you already have an SBA loan, the SBA will pay for principal, interest, and fees for up to 6 months. To find out more, you should contact your current SBA lending officer about that if you already have an SBA loan. Now, the express bridge loans are if you already have a relationship with an SBA lending officer, you'll be able to very quickly get emergency funds of up to $25,000. So that's also an option for you if you've got that relationship in place. And then the economic injury disaster loan, which is commonly just referred to as the disaster relief loan. I do have a handful of clients that have already went through the process. They were concerned that by doing that loan that would remove them from the opportunity to get the PPP. It won't. And so we'll address what happened if you've already done the disaster relief loan. It is not likely that you've gotten funds from that, because the SBA and economic injury disaster loan is the full SBA loan process. So that one's going to take you a little bit of time, but it's a really good option if you need more money than what's going to be provided in these other options that we're going to talk about. So the three ones I have listed here, there's not really any free money involved with these, but there is really good interest rates on the disaster relief loan. And if you qualify, if you're in one of the states that have been declared a disaster, that's an option if you're looking for low interest rate funding options. Now, continuing on, this is where there are some credits and actual, you might say, free money. So the employee retention credit, as Fatty had mentioned, is eligible if you meet these qualifications. So if you're partially or fully shut down due to the coronavirus, or you have a significant decline in gross receipts. So they're going to measure that by 50% less than the calendar quarter in 2019. I'm hopeful that you aren't in a shutdown or partially shut down and you aren't down in gross receipts. I'm hoping that this is not a good option for our lawn care industry, because I think that this should be the summer of lawn care. For the first time in my career, this is an economic downturn where I think people will keep their lawn care. Other economic struggles, you think that they're going to give up the lawn care because it's an extra, something that's not necessary. But think about everything that we're giving up. The kids aren't going to summer camp. We can't go to the gym. This is going to be, we can't go on vacation. And so I think this is the year where people will actually keep their lawn care. They're going to be more interested. My family was already out on the porch and we were assessing the condition of our lawn furniture and talking about our grass. So the coronavirus is unfortunate for the nation, but I think that lawn care is an industry that I'd want to be in right now. So with that in mind, I don't think the employee retention credit is going to be the best option for most of our lawn care customers.
I guess, Katie, as you mentioned, right now, as of April 3rd, we only have Michigan shut down altogether. Minnesota keeps going back and forth. So in those couple of states, it certainly could be worth tracking your receipts through Service Assistant, but you are correct. The other 48 states, it's full speed ahead.
That's right. And you know, I'm hoping that you're absolutely continuing on the growth path and that you're going to beat your numbers for 2019. And so the employee retention credit is not going to be where you're going to find the funding to help you stay in business and grow and be profitable. So the Economic Injury Disaster Loan Emergency Advance is a quicker loan application. And this is something that should be evaluated, that you should evaluate before you do the PPP. But I'm thinking that the simple calculation that's involved with the Paycheck Protection Program is going to tell you that you can get more money through the PPP, and you're probably also, so then this isn't going to work for you. I do have the links. This you can apply online. This one's another, it's easy, it's fast, and it's up to $10,000. And so it's not, you don't just automatically get 10,000, you could get less. And this one does not need to be paid back.
Katie, real quick though, it is an either or. If you have Paycheck Protection Plan, you do not want that particular one.
Yes, I think they've not been, and like Fatty had said, what I'm speaking about today is the latest information that has come to me. In some cases, I'll let you know when I'm making some interpretations, or like I said, how I'm treating this is if I were the owner of a lawn care business, these are the steps that I would take. This is the thought process that I'd be going through. So a quick, well, this one's just up to 10 grand. Let's take a look at the, well, you know what, let's, just for evaluation purposes, the employee retention credit. If you think you're eligible, you still may choose to do the PPP, because the maximum amount that you're going to get through the employee retention credit is if you take your number of employees and you multiply times $5,000, that's going to be your maximum credit. So you can kind of just sort through this quickly. And I think most of our customers are going to fall into that PPP option. Now, also, like Fatty said, the low risk with the PPP, so I'm going to switch on here to the next slide, you can go ahead and apply for this loan. And then whenever you look at your forgiveness options, which we'll discuss in a few more slides, if you find that you're not going to get forgiveness, that you can't maximize your opportunity, then simply don't submit these funds for the forgiveness program, and you still will you will still be able to do that tax credit. So you can actually do the tax credit and participate in this loan. You're just going to need to manage that forgiveness process a little bit differently. and we'll talk about that. So where I think my focus today, and I want the small business owners to be exploring this option. So when you go to the SBA website, here's the one I think you should click on first. It is up to $349 billion that have been authorized to support the small businesses. The focus on the Paycheck Protection Program, think of paycheck, is focusing on payroll. And so there is a bunch of qualifications here around payroll. What I like about this is that it's easy to apply. There's no collateral or personal guarantees. The application is only 2 pages. And so this is very different for those of you who've experienced the SBA loan. This process is going to be very different. There's a forgiveness component. How much can be forgiven surrounds reductions in the number of employees, both headcount and wages. We'll discuss that a little bit more later. The payments are going to be deferred for 6 months. There's going to be no loan fees. And then the term is 2 years. The interest rates I'm seeing right now are 0.5% to 1% on this 2-year loan. I've got a link for the docket, which goes into a lot more detail than what they have posted on the SBA loan right now. But to get the best information, you're going to want to talk to your loan officers. And so an SBA loan officer, if you don't have one, you're going to want to get one, and they're going to ultimately be able to evaluate what you need for this loan. What I'm going to tell you today is what I would be doing right now to be prepared. Eligibility. If you have 500 employees or less, you're eligible. If you were in business on February 15th, 2020, February 15th is a measurement date, and we're going to use that a lot in the coming discussion. So on February 15th, your loan officer is going to ask that you support with some supporting documentation that you were in business. Something like your payroll register for 215 will work. Individuals and all owners of 20% or greater must be U.S. citizens. And so this is a United States crisis loan. So they want to make sure that everyone participating is in fact a United States citizen. Not convicted of any felonies within the last 5 years, and that you haven't defaulted on any SBA or federal loan in the last 7 years. Part of this 2-page, actually as far as real estate of the document is concerned, the 2-page application has several other criminal type questions that you will need to go through. So you'll want to see the application and be familiar with it and be ready to answer all of the questions. So how do you calculate the amount? Why do I think that this loan is your best way to go? Essentially, you're going to get 2.5 times your average monthly payroll run. So if you take your payroll, you multiply times 2.5, that's going to be roughly what you'll qualify for on this loan. Now you have something to compare all 3 of these free money loans against to decide which one you want more information on. Most people are going to find that the PPP is going to get them the most to borrow. What is included in payroll? And so now I'm going to take a moment and circle back to the application. Whenever I look at the application, I think it's all fairly easy, narrative type questions, but there is a few financial pieces, and I want to discuss the financial pieces. There is some minor instructions. They're not really clear, so I think I'd like to offer some clarity on how they're calculating that average monthly payroll. You can include salaries, wages, commissions, similar compensation, tips and equivalent, vacation and other leave, allowance for dismissal or separation. You're going to need to support that number. And so the tax document, your Form 940, is going to be a good place to start with that, as well as your payroll records. So the payroll companies, some of them like ADP, are even offering special reporting where you can click a button on the coronavirus help section and it's going to give you a summary report. Group health benefits, including premiums, can also be included in that payroll cost. Retirement, if you're matching, if you have an employer component of your retirement plan, and then the employer payment of state and local taxes that are assessed on the above compensation. The loan application is going to give you specific time periods where you need to evaluate that payroll. For most of the companies, it's going to be calendar 2019. And then there's some other dates if you're a brand new company or if you're significantly seasonal in nature. You may want to look at those other calculations, but that's spelled out nicely in the application.
Maybe, so sorry, maybe a quick question here. Given
Sure.
that a lot of lawn care companies are very seasonal in nature, you mentioned that the right place for them would be to look at the application to determine what is their average monthly payroll cost given the seasonal nature of their business.
Yes, that's a good question though, because I think if you are in lawn care, you might want to run the numbers both ways. And so I would take a look at my calendar payroll and I would run this calculation for the calendar year. And then I would also run it for February 15th through June 30th. I'd run it both ways. I'd have that number handy. If I'm looking to maximize the amount I want to borrow, then I would, whatever of those two calculations, whichever one will lead me to the highest 2.5 times for average monthly payroll, that's the calculation I would go with. Like I said, this is just, these are approaches that I would take in the end. The loan officer is going to help everyone walk through the details, but I think there could be risk that the funding is going to run out. And so I think that it's very prudent of everyone to get this application, print it out, go through it, run these numbers, be thinking about it, then contact your loan officer and evaluate if you think this is the best way to borrow money for you. These interest rates really can't be beat. But I think,
I'm sorry. One question, and Fatty, you may or may not be familiar with this, but many of our lawn care owners have a typical layoff period over the winter months. In fact, some that I spoke with in northern markets were just now in the process of bringing those folks back. Would that have any impact on this calculation because they were already laid off?
it would, because of the nature of, you take your payroll off of your 4940 for 12 months and they were laid off for 3, that's going to lower your monthly average and lower the amount that you'll be eligible, that you'll qualify for this loan. So that's why some of the components that we're going to talk about today is where you might read this very short application and not know where to go to get the numbers or not know where to start. But they do clearly define if you're a seasonal business, and many lawn care companies in the north, will qualify for that. You're going to want to look at your payroll numbers February 15th through that June 30th, 2019, because then your average monthly payroll is going to be higher. So when you do the equation, 2 times your average payroll, you're going to be able to borrow more. There's pros to cons to that when we get to the forgiveness piece. And so that's why it's worth business owners working this out, spending a little bit of time on this so they know how they want to fill out this application where they might have some options. So that's a good question. And I would run the calculation both ways. And like Fetty said, definitely run it by your tax CPA as well. So these components can all go into your number that you're calculating the wage. So you're going to want to gather these. They will all come right off of a payroll report. So you'll easily be able to tell off your payroll report what you as an employer have paid for state and local taxes. Health benefits, the only piece you're going to see on your payroll report likely there is if your employees contribute to the health plan. Your employer health care expense will need to be, the employee portion of that will need to be backed out for this calculation. And we're hearing that you're going to need to support your health expenses with bills. And your retirement contributions, if you're an employer that's matching, you're going to need to support that with statements. So your 401k statements from your custodian or your administrator, and then your healthcare bills will be part of to support this application. So what is excluded? The big one, and I have it in blue because this was not clear, they are going to be excluding the 1099 contractors. And so you're really only going to be looking at payroll for your W-2 folks. So your 1099 contractors will not be included in your calculation. That is the word as of today. And then another deduction or reduction that you're going to need to make is any individual who made over $100,000 over an annual basis. So if you are doing seasonal, you're going to have to prorate that. But on an annual basis, employees who made over $100,000, anything in excess of that is going to need to be backed out of your payroll equation. And then, as mentioned before, any employees that reside outside the US, you cannot include that payroll. and you cannot include the qualified sick leave or the family leave wages that we talked about earlier. That's part of the Phase 2 Act. Those items cannot be included in that 2.5 times amount you're calculating. So this, you're going to arrive at this number, you're going to enter it on your application. That's the dollar amount that you're applying for this loan. Before I go into loan forgiveness, I want to talk about the one other box on the application form that might be a little bit challenging. Part of this loan and the forgiveness is they are going to evaluate how many jobs you've had before this coronavirus and after. This being the Paycheck Protection Program, they want to ensure that you're keeping your employees 100% employed. So you aren't declining in headcount and you're not declining in payroll. You're not having any of your employees take pay cuts, for example. So there's the number of jobs that are on here. And we actually have I have a whole little spreadsheet about how to calculate those coming up ahead. But that one, there's still speculation on how to calculate that number of jobs. And those are the two financial pieces, we'll say, on the loan application. The rest is administrative and very narrative in nature that I don't think any of our customers will have a problem completing. So forgiveness, why is this a good loan? It's easy. Most of us are going to be eligible for it, and we may not have to pay it back. So what percentage? If you fall into certain qualifications, you could get up to 100% of this loan forgiven. I think that might be challenging, but run the numbers and see, and I think it's a good program, even if you don't get 100% reimbursed. Here's how that's going to work. So you come up with your number, 2.5 times your pay, and you're going to get the money in your bank. That's going to be the date that the money has showed up. This too has not been totally communicated, but either the loan origination date or the date that you receive the money. The forgiveness period is going to be 8 weeks following that date. And so the only money that's going to be able to be forgiven from this loan is going to happen immediately 8 weeks. So that's where Fedi said, if you're in a position where you haven't brought all your employees back, if you aren't running full payroll, I just don't see that as being relevant in lawn care. Once again, it's April, it's April. So I think that you won't have a hard time meeting these payroll both in headcount and in dollar amount, because you're just going to keep on ramping up. There's no reason why you're not out there doing lawns right now. But so I'm not going to discuss any other the pros or cons regarding that. You need to be out there doing the work. At least 75% of what you borrow is going to have to be used for payroll in order to qualify for the forgiveness. And so you've got your total loan amount, you multiply that times 75%, those dollars that you spend in the next 8 weeks following receipt of this loan will be forgiven. How do you compute the payroll? What did they include in that 75%? You go back to the previous slide as to how you put together your payroll calculation in the first place. And then what else can you spend your loan money on and still get 100% forgiveness? You can spend 25% of what you received for the healthcare benefits, which I rolled into payroll, interest on your mortgage, and interest on other debt, rent, and utilities. Note, though, that the healthcare plans, the interest on mortgages and other debt, rent, all of those contracts or service agreements needed to be in place on or before February 15th. So they're preventing you from running out there now and spending money and engaging in any of these additional activities, thinking that in these 8 weeks you can get them forgiven. All of these contracts and service agreements needed to be in place prior to this loan. And the measurement date is going to be February 15th, 2020. So the employer must maintain the same number of employees or more and maintain compensation levels. Exactly how they're going to calculate the ratio of forgiveness, will you be eligible for 100%? So there's two components here, because I know this can be confusing. So you have your bucket of money that you receive, break that into 75% and 25%. 75 has to go towards payroll, the other 25 can go towards these other items. That amount, your total loan that could be forgiven, may be reduced if you have less employees or a decrease in total compensation. Those details haven't been released, but like I said, I don't think that's something I'd be spending much time with my lawn care clients because they're all ramping up. Loan forgiveness is not to exceed the loan principal, of course, and I'm even seeing that you might have the interest forgiven as well. So that I've been seeing some conflicting information there, but you might also be able to get the tiny amount of interest that this loan is going to command over those 8 weeks. Loan forgiveness amount won't be considered taxable income. So then after those 8 weeks, you may not have spent all the money that you had gotten through this loan. You may continue to spend that money, although it won't be forgiven. It will be a balloon type payment in 2 years. You can continue to use that money, but you still must stay within the parameters of the payroll and the items that were listed. And those items are also listed clearly on the loan, on this 2-page loan document, so you can see what you're allowed to be spending the money on. The payroll component was the only part that needed to be further defined. So if you elect the PPP forgiveness, you won't be able to do the employee retention credit. But let's say you borrow this loan and it turns out, once again, I just don't think this is applicable for lawn care. I think that you're going to end up finding that the PPP is going to get you the most money that you don't have to pay back. But if you run the calculation, you have the money and you're seeing that you just aren't running a lot of payroll those next 8 weeks for some reason, then you'll want to compare your benefit with the employee retention credit before you file for forgiveness. There's going to be a lot more information, including an application for forgiveness, coming out in the next several weeks. If you need more money because you are, in that situation due to the coronavirus, you can explore the disaster relief loan, which is up to $2 million. If that is part of your financial needs and your cash forecast, you're definitely going to want to look at some cash forecasting when we work through these loans as well. So here's the number of components. This is a good slide. I'm glad it's in here. I'm glad it's posted. I think it helps with the FTEs. We just aren't sure exactly how the loan officers or how the SBA is going to want this computed. But essentially, one of 2 ways. You can take 12 months out of the year. Each month, you look at your FTEs, your full-time equivalent employees. So if you have people who are part-time, you would make adjustments for that. If you're seasonal, we think you're going to do that same calculation for the exact period that you're applying the payroll. So we're thinking this FTE calculation is going to, whatever time period you're doing your average payroll, is the time period that you're going to compute that those FTEs. And although this is where some of the confusion is and why some of the many banks are not able to launch today. Applications were supposed to open on April 3rd, but a lot of them are not sure what information they need to be collecting to support the loan application. So the banks are still working that out with the SBA at this very hour. So what should you do? I think you need to look at the different loans. You can do a quick calculation by taking $5,000 times the number of employees to see if you think the tax credit might be on the table for you. If it's definitely not, then you need to be taking action with filling out the Payroll Protection Program. SBA banks are going to be able to process this as well as additional banks, because the banks that are currently assigned or allowed to process SBA loans, they don't think are going to be able to handle the volume. I think that this program is likely to run out of funds, but I don't know that anybody knows when that is. And so I'm recommending that my clients print this application, fill it out. If you have any questions, ask. Definitely build a relationship or contact a bank. Make sure you know where to go, how you're going to apply, and then pull the payroll reports and all the support, your bills for the healthcare, if you have healthcare, 401k. Get all of your support for this application together. There's some affiliate information that also needs completed. Have it ready to go, make a connection with the bank, and then take a look at your cash flow, talk with your financial advisor, and likely pull the trigger on doing this application. So I would ask if there's any questions, but we don't have a real audience.
That's okay. They will be forwarding them to you because we will have your contact information available on here. I have a question for you. It noted that student loans, something about your employer, well, I have seen a couple of notices for student loans. One, that they were suspending federal payments of student loans without incident, but I believe you had it somewhere in this PowerPoint. What was the implication for an employer with regard to student loans, employees?
I don't think that there is. If Fatty's still on the line, he can talk about that. Go ahead.
Yes, I'm here. So correct, there was individual relief as part of the CARES Act. And what that means is the employer can exclude the relief that student loan assistance that they provided up to a certain amount. The amount is $5,250 is excluded from that employee's gross income. So typically what would happen is that amount that is the employer is paying something on behalf of the employee that ends up being taxable income. And so they're basically saying that can be excluded from that employee's gross income. So that should lower your liability, your tax liability, when you bring your adjusted gross income down.
Excellent. And Fetty, one more question for you. I know this is fluid. Have they made any overtures to there being additional programs imminently in the next few days, or should we assume this is what's available for the foreseeable future?
You know, it's tough to predict what's happening in Congress. I think there have been some members of the House and potentially also the Senate that have been talking about a phase 4, so additional stimulus. I don't think that there's anything concrete about that. I wouldn't count on anything right now. It's just conversations that are happening in the legislative branch. And so I think what's most important for folks listening to this is there is a significant amount of stimulus available as part of the CARES Act phase 3 and to act fast on at least what's available today.
Excellent. Do you have anything else to add to the presentation today?
Well, maybe one question for you, Beth. Real Green, what can Real Green do to help our lawn care customers as they navigate this program?
So it's an interesting timing. I'm glad you asked that question. I have always referred to this period as it's Christmas Eve at Walmart, meaning you don't make any changes in any of your best practices. You've already done most of your marketing. It's the highest peak of sales that anyone could have. And I have referred to this crisis as being the worst possible timing, but many of my veteran peers have said, no, it's absolutely the best timing because as Katie mentioned, our consumers are very engaged. So Real Green is available. We provided, if you're using our automated marketing assistant at no charge to you, a communication for your customers. And if for some reason you haven't taken advantage of that yet, certainly please email me and I will get that over to our sales team so we can deploy that for you. Our integrated automated messaging is what we feel is a big piece of the value proposition for our software, but now more than ever continuing to communicate with your customers the best practices of the industry and your intent to certainly serve their needs during the highest point of the season. We are available to help you deploy mobile technology. Your sales teams can now work remote. We've taken companies that have large door-to-door sales teams that obviously aren't doing door-to-door and help them redeploy those resources with using our online products and turning them into call centers very quickly with the tools. We obviously have a 24/7 customer assistant website portal, and you're able to do a lot of the cash processing, asking your customers to pay that way as opposed to mailing a check into the office when many of the employees have been deployed. We've received a lot of positive feedback that that's enabling business continuity in many ways. And then we rolled out a partnership earlier in the week with LawnBot, and that has allowed a 24/7 chatbot for sales that produces an ROI in a matter of hours after launching it. So Real Green continues to innovate and build upon the products that we have, although most of us, perhaps only a handful, are still in the office for on-site tasks. We have had to quickly deploy and to meet the needs both for continued development. Our development staff is deployed and still working on projects that are on task right now, and our tech support is 100% deployed remotely, but we are available to serve your needs. And anything else you can think of, whether it be a business unit expert, I'm happy to get those for you. Real Green, every day at 11 a.m. Eastern Standard Time, we host Facebook Live, and it's usually an introduction from myself. I'm also the member chair for National Association of Landscape Professionals, and we are tied at the hip with Andrew Bray and Bob Mann, understanding really the hour-by-hour changes in terms of our ability to follow Homeland Security guidance of essential workforce and providing those best practices for our customers as well. Kate, you got
Excellent.
anything else for us today?
I don't. I think 2020 is the summer of lawn care.
We love that. We feel strongly that way as well. I thank you both for being my guests today, and we'll forward you any follow-up questions should I receive them through the channels here. And as always, if you have anything new on the horizon for this content, I'd appreciate you forwarding it to me. Again, we would like for all of you to view this as informational. We've provided the appropriate links. You always want to talk to your tax professional or personal attorney to understand what is the best course of action for you. And we appreciate your time today.